Hey, it's Amy Lewis from the KFBK Morning News, along with Brandon Haefele from Catalyst Mortgage, and we're doing the Catalyst Report. And this time we're kind of pulling back the curtain on some things that maybe the banks and the lenders don't really want you to know, like the fact that they make money. How do the lenders make money on our loan?
Well, they make money a couple different ways, and really, it's important that consumers just understand the overall process. Up front, when a loan gets sold to another lender, a profit's made. When an interest rate is given a little bit higher than what, let's say, the going rate is, today, let's say it's a 3.5 and they give you a 3.75, there's a little bit more profit made. So understanding that no matter what, companies make money, and it really just comes down to the type of loan, depends on the investor you're working with, and it also depends if they're going to sell the loan or not.
You talked about something too that's called the SRP. What's the SRP? What's it stand for? What's it mean? Why should we know it?
So service release premium is what it stands for. And what it means is lender A.
It just rolls off your tongue.
Yes, service release premium. What it means is lender A will release the servicing rights on that loan and sell that loan to company B or lender B. It's important for consumers to understand that your servicer does not always own your loan. Most loans are owned by Fannie Mae and Freddie Mac.
Right.
Your servicer is just that. They're the servicer of your loan. They take your payment, they process it, send it on to, Fannie Mae, the remittance of the balance. But what's important there to understand is servicers make anywhere from a quarter point upwards to a half a point a year just to be the servicer on your loan every single year. Now, of course, people refinance, so it could be only for 5, 6, 7 years. Mm-hmm. But the point is they're making the money. So why that is important to a consumer is if you're a servicer, you're going to want to buy the loan from me. And when you buy that loan, you're going to pay me a profit. But on top of that, I can make an additional profit by giving you a higher interest rate than what, let's say, the going rate would be. So I'm going to be able to inflate my profit even more. And why that's important, Amy, is consumers can leverage companies that will actually increase their interest rate a little bit more to then have them do that to give them a no-cost loan. And we're really talking small amounts of an interest rate.
So the SRP then varies from company to company? Is that something that I need to know going in?
Really no. The reason I always say it's good to just understand how mortgages work. It's just for knowledge is power, but it's really on a smaller level than it's not, company A, company B, company C. It's all different. I mean, depending on the loan type, but it's important to understand how we make money and that we have the power to make things change a little bit based off of what our profits are going to be on the backside of the loan to ultimately give you a credit to have zero closing costs on the front. Now, I want to be clear. Some companies do make money in both ways. They're going to make service release premium and they might charge you, points. But it's finding out, the interest rate spread versus what points you might pay when shopping from A, B, and C, and which one's going to be the best for you.
But do you use the SRP, the service release premium, to benefit the borrower? And if so, how does that benefit the borrower?
Well, if a company's going to make profit on the back end of the loan, they have the ability then to credit to cover closing costs. And if the service release premium that we're receiving is not enough, they can always increase the rate a teeny bit more to make more profit on the backside of the loan to give the client a credit to cover more fees.
But this is something that's important for the customer, the consumer to know.
Absolutely. And it's okay to ask, how does your company make money? Yeah. Where do you, are you guys more of a no-cost profit center? Do you guys charge?
Right.
More like, what's your balance? Ask those questions, because then when you're looking at your deal, you can see, okay, hey, I need to shop around because I want, no cost. This company really doesn't specialize in it. Let me go to someone else.
Yeah. So now SRP, service release premium, just another term to know going in if you're going to refinance your loan or just talk to people about it and get the process going. That's what the Catalyst Report is all about. Listen to us Monday mornings from 7 to 8 as well on KFBK for the Catalyst Report with Brandon. Go to catalystmortgage.com for more information too and check it out. You'll learn a lot of information there.